Hello friends, till now we have discussed about the objectives of import-export trade regulations. We have discussed about the overview of legal framework, and we have discussed about the Foreign Trade Development Regulation Act, Foreign Exchange Management Act, Custom Act, role of Export Quality Control Act, export import policy objectives, earlier export import policy, and the objectives of the latest export import policy of 2015 to 20. In continuation with that, we have to discuss about, we can say, we have to discuss about what is the procedure or how we enter into the export import business. For the same, we need to, set up a business organization. We have to decide that whether we are going to run the export business individually, or we need to collaborate the hands with any of the partner. We are going to run in a form of corporation, LLP, or which form we are going to run the business. So what will be the organization structure, how we are going to have the support of our business organization. After that, we need to obtain the PAN number from the income tax authority, importer exporter code number, which is generally known as IEC number. Then we have to, obtain this number from the regional licensing authority. Then we have to take the registration cum membership certificate from the concerned export promotion councils for the same. Then we need to obtain the registration certificate for the GST from the required authorities. Then we have to work for, if we are working on the small scale level, then we need to obtain the registration as a small scale unit. Along with that, if you are working on medium unit or large unit, so according to that, we have to obtain the license and the respective service provider and the authorities. Then after that, when we wish to start our business, we have to do the business correspondence with respect to our product availability, which products are either we are going to manufacture or procure, or how which particular specialization industry or domain we are going to enter into. Then after that, once we have decided about, or we have made the we can say manufactured the project products, or looked about the services, or have set up our business, then we are going to send the export sample, or will exhibit about our business, about the availability, about our specialization, or the services which we are going to provide into which kind of which particular industry or domain we are going to enter into. Or there is an option that instead of sending the sample or having the exhibition, we can tie up with the overseas agents, wherein we can give the profile of our organization, we can share, and we can look for the market needs or demand in the respective country, that whether our services are needed there or not. Then there can be the separate kind of agreement with the overseas agent, depending on the country, depending upon our goods, products, and services, and the requirement and demand in those country. Then after that, once we get certain orders, then we try to understand the need of the buyer, whether they are going to take our product as it is, or we need to design or reshape, or any special thing to be incorporated in the products and services as per the requirement of the buyers. Then we are going to negotiate with the prospective buyers about the price, about the quality, about the other things, the terms and conditions, how to deliver the goods, or what other things can be attached in that, or if any specific things to be attached, etc., that is to be taken care of. Then after having the negotiation with the buyers, we will enter into the export contracts. After entering into the export contracts, we need to understand the new foreign trade policies and procedures, because we can work only in the legal and the regulatory environment, as already discussed in the earlier unit, that there are separate acts and separate regulatory authorities which regulate the different products and services, different domains. So we have to strictly work in the particular domain. After that, we need to obtain the credit limit for the buyer or buyer's country from the ECGC, right? So from the Export Council, we have to obtain that we need to know the credit worthiness of the buyer who is going to buy our products. So for that thing, on the approval, on the obtaining the credit limit, after obtaining the availability or the credit by following the, we can say, the letter of credit or other kind of facilities, we are going to obtain the finance for the export. So because all the transaction, these are generally have the bulk assignments, and the we have to have the sufficient finance, and the credit etc can be taken on the basis of the project or on the basis of the business. That depends on the different dealings between the banks and councils and the exporter. Then after that, we can have the do all the task ourselves for closing the transaction, or we can have the forward exchange contracts for avoiding loss from the exchange rate. So whenever we are taking the loan, the transaction contract is entered into today and may be delivered after a few months. So in that duration, if there are any exchange rate, currency rate fluctuation, so to avoid these loss, we can enter into the forward contracts, and also for other things we can go for the insurance contracts as well. Then after that, we ensure the quality control, as we have discussed that Export Quality Control Act is there. So we need to ensure the quality of the product, and before the shipment, the goods needs to be inspected and a clearance certificate needs to be obtained. After that, labeling, packaging, or packing or marking of the export consignments is to be there. Then after that, if there are any tax clearances, GST clearances, we have to obtain that. After following this particular procedure, if the goods are going through the sea route, then the marine insurance is very important part of the whole procedure, because there can be various kinds of perils or various kinds of possibilities of loss. So to protect our consignment or to protect our goods, etc., from these kind of loss, the insurance cover is required. And about the insurance cover, different types, different things, we will be discussing later on. After taking care of the insurance of the goods, we are going to comply with all the exchange control regulations regarding the declaration of the goods. So we have to see that goods are not in the restricted category goods, or if there are certain kind of exemptions, certain kind of policies or benefits are there, then how we can obtain that. Then after that, we need to completing after the declaration of the goods, we need to prepare and obtain the export documents, and then we need to ship the goods, and custom clearance of the goods is to be taken. After taking the custom clearance of the goods, we are going to tender the document or present the document with the bank, and the bank is going to present the documents further with the issuing bank to obtain the money against the particular transactions. Then after that, we need to understand all the foreign exchange regulations and facility, how the funds can be there, how the currency can be changed, or how other things can, help in completing closing the transaction. Then we need to understand the different facility, exemption, export promotion zone, different kind of subsidies which are given in the foreign trade policy. So it would be always advisable to go for those products and services which are supported by the government, and different kind of subsidies are there, interest free loans are available, or different export promotion zones are there, different kind of tax incentives etc are provided under the different trade policy. And also we need to understand the facilities in the foreign trade policy as well. Then after that, we need to understand the duty drawback scheme or marketing development assistance which are provided in the other countries, and after that the refund of the GST can be applied. So all this procedure will be carried out, and we will be learning as per the syllabus, slowly and gradually, what are the topics we have to discuss in detail. So before going for the further things, as per the unit 1, we need to discuss registration formality and obtaining the export license. So for this particular thing, there is the code number or license is given in terms of importer exporter code number. So it is also known as importer exporter code, ISE, IEC, and it is generally given by the regional import export licensing authority, and we have to apply for the same. And this procedure says that we need to we need to give the profile of the respective importer or exporter, and we need to give the respected fee in the bank receipt in the duplicate. Along with that, the passport size photograph, and if the person is non-resident, then the full complete details and the copy of the RBI approval is required. And also there is any kind of association with the listed firm or anything is to be declared, that there is no non-association with any of the listed firm. Along with that, when all the details particulars given to the authorities are satisfied, the formalities are to be filled, complete form is to be given, and now it can be applied online on the digital platform also. So once all the rules and documents and other required formalities are fulfilled, then the ISC registration come, membership certificate is being issued, and this particular certificate will carry the details of the business, will carry the details of the export importer profile and the registration number also. Then when we have to go for the export license, then we have to see that our organization or our unit is not registered or not covering, not dealing in the prohibited items. And prohibited items, or we can say that the restricted item and canalized items change in different policies. So depending upon the promotion to one of the area or the other area, these lists can be change over time. So the negative list of export should not be there. So our organization should enter into the transaction or contract of those goods which are freely tradable. Then how we obtain the export license? For that particular thing, we have to apply for the export license in a prescribed form to DGFT, that is Director General of Foreign Trade, or the regional license authority. This application is required to be attached with the several documents, and in that case, if the restricted item and application is to be made in duplicate, and two different export license to be obtained. Then there is application for the export of restricted items, expect special chemical or special material equipment, technologies, etc. This form is sent to the DGFT. Then the application for grant of export license for special chemicals, etc. should be given. An interministerial group under the chairmanship of DGFT shall consider all the applications for these items. For canalized item, the application is made in a prescribed form, and there is certain ceiling limits the applications can be made to the DGFT. Then there we talk about the general provisions regarding the exports and imports. So whenever we talk about the transaction, because these transactions are to be entered into with different countries, and there should be the different treaties, different categories of the goods. So export and import, the after the liberalization of the economy 1991, the major purpose was to promote the export and to have certain kind of restriction on the imports. So certain regulations or certain regulatory framework have been introduced, and exports and imports are free unless restricted or unless regulated. So the free trade of the goods was allowed, and the different things or certain promotion schemes have been introduced in the respective import export policies. Then we talk about that all the people, those who are entering into any kind of export or import transaction, so they must comply with all the provisions of Foreign Trade Development Regulation Act and all the rules and regulations which have come up or introduced time to time along with this particular law. Then there is export import policy, wherein all the rules and provisions given would be final, and we have to comply, and any contravention will invite the penalties, etc. Then there can be certain categories or certain kind of goods, etc., where the exemptions are being given for the promotion of the goods. Similarly, how we are having the relationship with the neighboring countries. So in certain countries, certain goods are freely allowed, or in certain countries certain goods are restricted, so these are not allowed to be freely tradable. So there can be certain kind of treaties between the different countries. So according to that, we need to abide by those rules and regulation. Along with that, the transition of the goods from one place to another, or one country to another country, is also regulated along through the treaty between India and those countries. When we talk about the legal undertaking with respect to the bank guarantee or the letter of credit, so in that particular case, the duty-free import is allowed, and where it is specifically mentioned, then the legal undertaking or bank guarantee with the custom authority is required before the clearance of the goods to the customs. Then there is also the free movement of the export goods. So the consignment of the items of export will be allowed, and in case of any doubt, the authorities concerned may be asked for an undertaking from the exporter. Similarly, whenever the samples are being sent, so all the samples are governed by the exempt policy. And if there are third party export, then a license holder can export directly or through the third party. Similarly, whenever the goods have to move from one country to other country, so these need to be passed through the custom requirement. And as we have discussed about the custom act also, so all the legal provisions, requirements, etc. are mentioned there. Similarly, if there are certain units which are already have got the clearance, or they are already into a particular domain or particular level of export, so in those cases these are provided certain kind of benefits or certain exemptions at certain stages. And similarly, electronic data interchange is also allowed. So if certain kind of applications are there, the online portal have been opened for the license or for other applications and documents required for the clearance or for sending the goods to the other country, these things are allowed. Then then there are certain units which are considered as the safe zones, and these are the main objective is to provide the common facilities and to the duty free environment for the exporters. So there are different zones categorized, and different facilities are provided, and balanced economic growth are provided, and the different kind of essential raw material, etc. are being given. When we talk about the export import policy, already discussed in much detail. And also we need to take care of the foreign exchange. So any kind of monetary transaction, any kind of exchange regulation, Foreign Exchange Management Act provides an important role, and the RBI provides the guidelines, regulations, instructions from time to time with respect to the functioning of the market. So foreign currency valuation or changes, etc., an exporter is also required to take care of that. Then we talk about the different kind of organization which are being indulged in carrying out or taking care of the different activities. So if we talk about the trade management is managed by the Ministry of Finance through Director General of Foreign Trade of Import and Export. And then there is a foreign trade policy. And recently we are having latest policy of 2015 to 20. Then there is exchange management, which is managed by the Ministry of Finance through the Reserve Bank of India and through the authorized dealers. Then there is the trade, which is managed by the International Chamber of Commerce, and it also defines the rules governing letter of credit, etc. Then we have the ECGC, where it is managed by the Ministry of Commerce through the Board of Directors, representing government, banking, trade, and industry. So with respect to this particular unit, if we say, so we are having for export rules and the journal provisions, registration policies, and objective of export import policy, and the different acts. And we will be discussing with respect to the term of payment and the finance in the next unit. Thank you very much.